Hey everyone, me Kevin here. I'm standing outside of the Beverly Hilton because I'm about to go on an interview with Martha McCullum from Fox News in person here in Beverly Hills, California, which is absolutely crazy. But I wanted to give you an update because I probably won't be able to do the market closing live stream today. I wanted to give you an update about what the heck is going on in the real estate market and something crazy happening about housing that is super important if you're ever considering getting into housing. So here's the scoop. This video first is sponsored by Deal Machine. Go to metkevin.com/deals and get yourself access to homes before they hit the market by advertising directly to sellers that you identify as potentials that might come up on the market. I usually like looking for fixer-uppers that when you drive up and down a street, target those properties, try to get those before they hit the market because it is so competitive. metkevin.com/deals to learn more about Deal Machine. But okay, let's get into the topic. So here's what's going on. We've got a massive shortfall of homes right now. We are 5.24 million homes short in the United States right now. And the way they calculate that is between 2012 and 2021, we formed 12.3 million new households. And a new formed household is anytime somebody gets out of a shared living arrangement. So if somebody's at home living with parents and they're 21 and they move out and they rent their own apartment, that's a new household formation, just an example. And during this time frame, we formed 12.3 million new households, but we only built 7 million new housing units. This has been an issue that has happened over the past 9 years. It's not just because of the pandemic, but the pandemic is actually making it worse because we've got a big shortage right now. But consider this, during the pandemic, a lot of households actually got sort of unformed because younger folks went to move back in with their parents. So you've actually limited the rate of growth of new household formation. And when we fully open up again and these households go back out into the market, we expect there to be even more of a supply crunch for real estate. Now, I don't always want to be crazy bullish on real estate because, personally, I think a nice discount in real estate would be nice. Like the housing market would settle down and slow down a little bit, which it is right now. There's a little bit of a slowdown, a little bit of a sort of a buyer freeze we're feeling right now because buyers are finally resistant to how high prices have gone. So right now we're seeing prices level, we're seeing inventory level, but sales are still up. We're still seeing those pending sales push through. But here's the thing. The reason we're seeing this big shortage is likely to continue for the next couple of years and probably going to keep pressure on real estate prices to either stay stable or potentially even keep moving up, unless, of course, the Fed comes in and raises interest rates. Then we'll see a big shift pretty fast if interest rates move. But I think the Fed's going to be pretty slow to move. We'll see. I don't expect rates to change until at least the end of 2022, if not early 23. But anyway, why are we seeing this shortage in building? Why aren't we just building more? One of the reasons, the labor shortage. Not enough people qualified to be able to build homes. It's expensive to hire people who are qualified, and so builders just aren't building as much. In fact, new home builders almost all of them are lowering their guidance. They're just not building enough homes, and they can't get through the process fast enough because building material prices have gone up. Lumber prices have surged. We've seen, again, not just the cost of workers go up, but even the cost of sheet metal for ducting going up. Appliances are super delayed. Everything's delayed in housing right now. You've got waiting lists like crazy for new construction homes. But on top of that, you've got land prices that are also going up, and existing home sales have been obviously very, very difficult, pushing up prices, leading to less folks getting into homes. Big problems. And so here's the reality. When you look at our country, we're a country that overall is becoming more and more resistant to building new communities. And that's because, in my opinion, climate change and politics. Look at California, for example. We've got a lot of land in our inland areas. We've got plenty of places to build. Why don't we build? We don't build in many cases because of politics. Politics get in the way. Get this. California, just to break even, needs to build 300,000 homes per year. Right now, we build just 80,000 homes per year. In order to get ahead of the curve, we would have to quadruple how many homes we build in California. And in the United States, we'd have to double the pace at which we're building homes. So California is twice as bad as the United States. The United States itself is having big problems. So you've got a lot of issues across the board. And in my opinion, this is going to lead home prices to stay stable and potentially continue to move up, unless, of course, interest rates come to tank the market. Now, what do I think about this? Well, in my opinion, it's making me excited to look for potential deals. Now, some people look at this and go, Kevin, you're taking away supply from other people. But housing formations include rentals. So you're not really removing a household's opportunity to live somewhere. This change doesn't matter if you're renting or if you're owning. The issue is we just have to build more homes. But in the meantime, as an investor, it's very tempting to look for deals in the market. I'm in escrow. I'm closing next week on a deal. buy a fixer-upper, renovate it, rent it out, and build your net worth. If you have not started with real estate yet, because I've got to go. Here, Gabe, let me give you this. Maybe text them, that'll be up in a minute if you don't mind. What you've got to do is you got to get started. So one of the first things that we talk about when folks join my programs, link down below, 40% off coupon code, one of the first things we talk about is you got to get into owning real estate. If you have $30,000, $50,000 in the stock market, $20,000 in the stock market, what can you do to get into real estate now? And the reason for that is even if you're buying or you're paying mortgage insurance, even if your rate's a little higher because your credit's not perfect yet, but your credit's good enough to qualify, and you can qualify, most important, you can qualify for the payment. Not assuming you're gonna rent out rooms, you gotta qualify for that payment, okay? It's a 30-year mortgage you're gonna get. Qualify for that payment, get into real estate. Once you get in, property 3, 4, 5, so much easier, but you gotta start. People are like, Kevin, I want a YOLO options though with my 20 grand. No. Your first 20 grand, get into real estate. Then you can play options. Then you can do the other things. But build a base where you're finally controlling hundreds of thousands of dollars of net worth. That's what you want to do. Highly recommend you get started with that. I got to go into a Fox interview now. Really appreciate you. Cheers. Go buy real estate, and we'll see you next time. Bye.